Krishna Kumar joins us now. He's the head equity with Sundaram Mutual Funds. Krishna Kumar, good morning. Thank you for joining us. I just want to, get one big trend question out of the way. We were looking at the mutual fund collection for the month of March, and according to data what is there in the public domain, the March collections dipped to a 13-month low. Is that largely because of year-end factor, or this could be a trend in making?
I would think that data for 1 month would not be the the indicator to look at what could happen. From a longer term trend, I think the equity investing cult is kind of well entrenched. March had a lot of events in terms of, as you mentioned, the LTCG effect, and a lot of investors who wanted to kind of rebase the book that they had, in addition to the fair amount of dividends that also went out of the equity funds in the month of March. So I think we would look into the next couple of months to see how the the industry data is panning through. At our end, we had fairly smooth moves in February and March, and we did have a couple of NFOs also which did quite well together. So I think we're not seeing any big shift in terms of investor activity at a ground level. But we will await the next couple of months to see how the trends are. We are quite confident that given the kind of longer term view on the markets and the fact that valuations are fairly attractive at this point in time compared to where they were 6 months back, particularly in the mid and small cap space and across broad markets, in the backdrop of a very strong improvement in earnings growth that people are expecting, I think the equity flows will continue into the markets.
Do you think worst of the print is behind PSU Banks? Bad business at a good price. Buffett says go for the price. Do you think PSU Banks could be a contra buy right now? Because frankly, the news flow is now improving.
In terms of the corporate lenders, just not only the PSU banks, but including the corporate lenders, the last 2 to 3 years has seen a lot of pain and stress build up. And equally, we also seen policies aimed towards resolution. At this point in time, I would say that nearly 90 to 95% of all the stress is well documented, well captured by the banks in terms of their own books and in terms of what they've been guiding. So we are heading into a phase where the NCLT phase 1 is heading towards closure. Already we've seen a couple of deals that have happened with Tata Steel buying a couple of companies with very low haircuts. So all these point to a fact that you will have a lot more positives coming from resolution. Given that people were gunning for a 60 to 70% haircut, I think the the haircuts could be far lesser than what people anticipated earlier. So that's a positive, but one would like to wait for it to happen before taking a call. The other point is the RBI has also been quite kind to the sector in terms of reversing some of the stringent policies on mark-to-market of treasury. So with RBI guiding to yield losses being spread over 4 quarters, and along with the fact that there's been a benign interest rate environment that the RBI has been talking about for the next 6 to 8 months, it looks like the banks will kind of can see good interest with a contra view definitely. But one has to have a lot of patience to sit through this next 6 months where you will go through the phase of resolution and the P&L could look pretty bad. So people have to focus on the book and the provisioning that's been done and go for some of these lenders if they have a 2-year perspective.
Krishna, the IPO market, as active as it may be, you haven't quite seen the best of listings from both of those spaces. While there was 2 issuances from the government stable in Bharat Dynamics as well as HAL, then there was Bandhan Bank, which had a fabulous one. Today you've got a Lemon Tree listing coming in. ICICI Securities was a muted one. I know you can't talk stocks, but any sectors within these new listings that's been of particular interest to you?
I think one of the things on the IPOs is that people have become a lot more rational about the valuations that one is willing to pay for. So that's basically taken the heat off the market in some sectors. Couple of areas I think continue to be interesting is on the financials, basically, whether it's an online retail model that an ICICI Securities talked about, or kind of a small finance bank, or some of these NBFCs which are into niches. I think those continue to be interesting to investors at the right price. So these are areas that one would be quite kind of looking at with a medium-term view in mind. The other set of companies which have been particularly active on the markets is the defense, PSUs. These are very, very strong businesses with huge growth potential given the efforts of the government to localize manufacturing, etc. So while the business could be lumpy, could be a little bit more back-ended, these are very interesting sectors that one would watch out for given the Make in India program of the Indian Defence Ministry. So I think the bunch of IPOs that's happened in March have been very interesting from that perspective, and with a medium-term perspective, I'm sure that investors will make fairly reasonably good returns on them.
Okay, soon, Krishna, we're going to be stepping into earnings, and IT will be the first stable which is going to deliver its numbers. Given the kind of run-up that we've already seen in some of the IT spaces, be it a TCS which is already clocking a 52-week high, some of the mid-cap IT names have performed really well. Are you still seeing opportunities in this pure play defensive pack?
I think IT as a contra play last year did very well, and investors have been rewarded. Who had patience to buy into IT have been rewarded. At this point in time, clearly with global growth coming back and various other trade issues kind of lingering around, IT has been a good place to hide in, given that people are underweight in the sector. At this point in time, I think while growth outlook has been well factored into current valuations, what is still keeping the sector interesting is the huge cash flows that the companies are delivering, and the kind of opportunities that companies can kind of look at given the sizable cash on the balance sheet, whether it's been acquisition, whether it's a return of cash through buybacks or huge dividends. I think from that perspective, these are good yield stocks at this point in time. So we do not see much downside on this sector, while upsides can open up depending upon the growth guidance that will come out in the next 1 month.
Krishna, good morning. Have you reduced exposure to banks? And I'm talking about largely your exposure towards, I know you've spoken about banks at large, but I particularly want to understand whether or not there is a meaningful move towards finding value in the investment-led themes, whether it's construction, whether it's some of the real estate names where, for example, Sobha's earnings last week show that things might be looking up. Is the conviction still with the banks, where there's been a large overweight ever since, or has there been a shift?
So I think financials broadly, not just the banks, but more of the NBFCs, the financial services, wealth management, insurance bit. I think that's been where we have been focused on. On the banking side, it's more of the retail credit-oriented banks and NBFCs that we have been focusing on. However, given the domestic recovery that we are seeing in terms of growth, we are quite optimistic on the cyclicals bit. Definitely, infrastructure, construction companies, automobile, auto ancillaries, cement, and light engineering companies have been significant overweight exposures in our fund house, and we have been increasing exposures also to play this earnings season. I think this earnings season will clearly show a big rebound on the domestic cyclicals and sectors which you talked about, including parts of consumer discretionary that have been kind of lagging a little in the previous sectors on the food side. So we do hope that is a space where there will be a lot of tailwinds from earnings, and that can keep the sectors fairly ahead of the overall markets in an environment where there could be volatility from the local elections and the Trump trade wars news flow that could keep coming through the next couple of months.
I know that uptick in auto continues. You've got iShares, which is up. You've got Maruti, which is at 9200 now. So Maruti is one of those auto stocks which has really not corrected in this leg of market. Broadly markets are down 8% from the recent high. Maruti is not even down 8% from the recent high. So from the 52-week high, which was about 10,000 for Maruti, the stock has hardly corrected. But I want to point out tire stocks. Last week Seat, Apollo and MRF, all of them, they touched a fresh 52-week high. Krishna, we've looked at auto ancillary and we've spoken about it, and the area you represent has got some good auto ancillary companies also and some good auto ancillary managements as well. What do you make of this entire disruptive talk in the auto ancillary space, whether it is EV or what will happen to auto ancillary space if indeed world will move away from engine based technology to battery based technology?
I think the narrative on EVs has clearly, weakened over the last few months. People world over, and particularly in the emerging countries like us, understand that even globally EVs will take 5 to 10 years to kind of reach a meaningful size of the population and the annual sales. And in India, I think we still have a lot of uncertainties in terms of the various infrastructure required, the government policies there, the kind of subsidy that the government may have to shell out to make EVs attractive. So there is a lot of technology shift also happening on the batteries, etc. So while one would believe that in the next 20 years in India EVs would be a fairly important part of the auto mix. Over the next 5 to 10 years, I think the threat from electric vehicles or hybrids is going to be a lot lower. So I think with the view in the next 5 years, I think business as usual, and we are looking at companies which are having good business models to adapt themselves in terms of any technological change, etc. So I think there are a lot of components, companies which are also away from the engines basically. So one can definitely look at sectors and subsectors which are not related to the IC engines that you mentioned. So there is a fairly large opportunity subsect outside just engine parts basically. So that's another way of hedging yourself if one is too worried about the EV risk over the long term. So at this point in time, I think we are not too much concerned about the threat from EVs at this point in time. So we are having a fairly diversified approach to investing in the auto ancillary space in the portfolios.
Krishna, what's the view on metals? I mean, it's talk around metals has receded over the last few weeks, given that the start of the year was really and the closeout of 2017 was really about metals closing at a high and shining bright. From an earnings perspective, from what you're mapping as far as global trends go, what's the view on metals?
I think from a global perspective, there has been some amount of uncertainty that's come through from the trade wars and the duties that the US levied on aluminum and steel. While a lot of it is whittled down, still there is some amount of pressure on these prices. We believe that overall industrial metals and commodities would range in a range of about 5 to 10% in terms of prices. We do not expect any further correction in metal prices, given that they have adequate input raw material support. More locally in India, I think we are entering into a high growth phase in terms of infra projects, moving to the next level in terms of the auto demand and in terms of housing and construction. So this is going to keep the demand for steel and aluminum pretty high, and we have our own support from the government on the pricing. So this is essentially going to help Indian steel companies and aluminum companies to do well. So we remain fairly well positioned in the sector. on the metal side across various portfolios. We are at this point neutral and looking for probably better entry points to increase exposure.
Krishna, great speaking with you. Thank you so much for taking the time out and speaking with us today. Good chatting with you.